Good weekend, all. Ira Epstein with your weekend edition of your financial market wrap-up. And this is early. It is April 18th, Thursday, but we're not open for Good Friday. Please remember that. We're just after 3 o'clock in Chicago time. Settlement price is not quite in, but we're in that zone. As you can see, pretty stable markets. Where the action was the big rally in the dollar. I mean, that's a pretty big rally. And look at how much they've taken down the euro. What a great time for you to book your trip to Europe right now to enjoy what's going on there. And as you can see, still strength in the energy complex, ex natural gas, which is at that funny time of the year when you don't get a lot of demand. Now, the stock market, looking over its shoulder, must be also thinking to a degree the Mueller report's out of the way, and whatever the fallout, it's done, and the market can get beyond that. And I think that's one of the elements going on. I'm going to be on Bloomberg TV on Monday morning at 9:50 a.m. Central Daylight Time. If you can tune in, be great. So let's take a look at what we've got. I think the hardest thing for people to understand is how this market has come back from that Christmas Eve low and just shot all the way back up, knocking on the door right now 9 points away from the highest close we've had on a monthly area chart. So that's quite a rally that this market has put on. On the weekly chart, you can see that you're down a little bit. You're sitting here down about 4 points at this point. You know, it doesn't matter where it finishes out. You'll be in this general range. And look at how this market has come up. We have talked over and over about the potential here of a shoulder, another shoulder, and a head on daily charts. You've also got that same formation on this chart. You see it a little clearer when you put the swing lines on, but it's been one heck of a rally. You'd have to break through a previous break low to get any type of correction of meaning underway. That'd be 2789.50, and that's because if you take a look at how these break lows have fit in with the swing line, it's just where it's been, and the market has just been in this dramatic run-up. Don't you remember just recently as the market was right in here, we were all saying 2/3 retracement, and once you got through that, I said, you're going into a full retracement, and that's pretty much what the market has done. Whether it takes out that high or not, who knows? What about one other thing? As we get ourselves going at the end of April, remember the adage, sell may go away. I am not telling you be bearish. I am telling you that adage is out there for reasons. And I'm questioning now that we're getting so much behind us. The last big deal to get done now is China. And once that gets done, what does the market do next? Does it consolidate these gains? Does it pull back? Either way, even if it sell may go away, I don't see the fundamentals of this market being weak enough to keep it down going into year end. So the question is, do you get a pause at some point? When you're looking at this market in terms of moving averages, you can see how the 18-month moving, well, this is the weekly, this is the 18-week moving average has stayed over the 100-week, and that stayed over the 2. You had one shot, and who the heck wanted to buy the market in December? Think about that. Sky was falling in, market was in a state of panic. It just never really looked back. It paused once at the 100-week average. Once it got over that 18-week, it just didn't look backwards. In terms of hitting the upper Bollinger Band, it's very difficult for the market to do that right now because the trajectory keeps moving on a basis on how the formula is built on this, higher and away from the market. So right now that number from where we're at is 90 points away. What the market needs is for this number to start rolling on the top, and that only happens if the market backs off a little bit. You can see right here when you backed off how you were coming up, you stalled, but then you made the new highs. Well, that's been the problem. Momentum-wise, locked in. So you've got a bull market. It doesn't back off. The upper Bollinger Band's nearly 100 points away. It's just still very much in bullish territory. The NASDAQ a little bit different. The NASDAQ has hit that number. That's number one, the Bollinger Band. Then it backed off, but it's still moving higher. This market also knocking on all-time highs. You can see back here as you were going right from this level into the end of the year, and you've come back in this market. In the Dow, you wouldn't know if you look at the weekly chart, Boeing, any of these problems that you've had, because you are just keep moving on up in all of them. They're all in uptrends. The only one of these markets that's had a recent problem is the Russell. It's had the lower low, the higher high. It still is in good shape, but it's nowhere near like the other markets, its all-time highs, not even close to it. So this is the weak sister. And in the VIX, nobody still wants to own insurance. And as you can see, lower highs, lower lows, there's the pressure. Now, the question in this market is the 1436 level. That's the 100-week average. That's the resistance that the market's paying some attention to, and what I'd expect to see it pay some attention to. We then get to the notes and the bonds. And while the market is right now up a half a tick, the support is a little lower. It's back at 122.12 to 122.08. What's kept this market going is it got up here about a 2.44 yield. Now you're coming back into more of a norm at 2.6 plus type yields in these markets. Remember, the lower the futures go, what goes on? Real rates are going higher, and the opposite. The higher they go, then the rates are falling. When you come to TLT, I look for the support after this correction right here at the 18-day average and the 100-day average of closes. The trend is up. Momentum is down, so you've had this divergence where the market's kept the bias up since it's over the 18-week average, but momentum is pointing down in this market. Then we get to the rough one, the dollar index. Sideways action. Take the name of the chart off. Each time you've hit the upper Bollinger Band in the past, you get a small reaction backwards. Well, you haven't quite hit it. 97.49 is that number. You're at 97.14, but you've got the market with the confirmation this week that you're back into the higher low, higher high concept. To neutralize the trend, you have to take out now 96.36.5, the last break low. Momentum up, bias up, trend up, resistance upper Bollinger Band. The flip-flop has been the euro trying to get an uptrend going with the swing line and getting thwarted each time that it gets up to that 18-week average of closes. And now it's been thrown back with a big loss today of 73 points, as you can see in the market. In the British pound, the pattern is a strange one here. I don't know if I got the right part there. This break low was 130.27, right through there, 130.27, and this low is 130.16. So the reality of the situation is I have these wrong. Should be pointing down. Must have happened in the last few minutes because I had done these charts about an hour ago. But lower highs, lower lows, right in the support at the 18-week average. It's not a downtrend. While the swing line is actually pointing down, whenever the market closes over the 18-week average, you say the bias is up. It's a filter on the swing line. So you'd need a close under 130.18 for this chart to finally begin a rolling over process. And it hasn't since 2019, literally the beginning of the year, gotten back to a lower Bollinger Band. So this could be an event that is worth watching. In the Canadian dollar, the market has got a pattern with an outside week of lower highs, but it has higher lows. Be cautious with that. It's a market that's looking to see what it's going to do. Do you realize how many weeks in a row it just keeps hitting that 18-week average, not going anywhere? And that's keeping you within these Bollinger Bands. And it's frustrating for a lot of traders that are trying to catch a trend trade. If it gets up, they think it's going to follow through. It comes down, and it doesn't follow through. It goes back up on them. Difficult market. Japanese yen has been trendless on the weekly charts for a bit here. You've had the lower low, the higher high pattern. The bias has been down as you're underneath both the combination of the 18-week and the 100-week average, but the setup's wrong. What's wrong with it is normally if you're going to be bearish, you're looking for the 18-week to be under the 100, not over it when prices are below both. So I see this market not in sync with itself. In Bitcoin, you're over the upper Bollinger Band, and markets rarely stay over that very long. So you were over at, let's see, right now you're sitting at 52.95. 52.95. That Bollinger top looks like it's 5,055, so it's about 240 points away, and it's going to be the third week in a row over that. Market's probably overdue for a pullback within those bands. Then we get over to the Brent versus the WTI crude on a weekly basis, the differential. You went from 1076 down to about 720, and now you're back to the 796 level. When we come to the charts, they're still bullish. Higher lows, higher highs. That is still very much in the bull camp. Will you be able to get the 18-week over the 100 is going to be what I look for. We'll see if that works. The last time we had a bearish crossover was right here. And you went nowhere in this market real fast. And the reason you went nowhere is when the crossover happened, you were already over both numbers, and that's generally a false reading. You'll hear traders talk crossovers. Not when you're doing that. You have to be the other way. Prices should have been under it for it to follow through. And what then became was the 100-week average became the support in the market, and that's been still how you're at. Now the question is, do you get a bullish crossover where the 18-week gets over the 100? For it to be real, you'd have to be over those numbers. In the Brent, you're up in a resistance zone of the upper Bollinger Band. The trend has been all the way up. You realize this is a market that in December was sitting here, in the $45 range, and now you're sitting at $65. It's gone up almost 50% in price. And the question is there more for it? Will the economies of the world be able to support it? Will Russia continue to do what it's been doing in Brent, which is keeping oil off the market, but now they've come back with a lot of that oil that they had pledged in it. They're producing again. Gasoline, going into the Easter time frame, you think you're going down in price. Now you're going up. You know that. They're going to get you on all the driving as we get the summer going, and that's where you're at. It's spring right now, but summer's not far behind. Then last is the nat gas, which has no bullish story. You don't have cold weather, enough cold weather to really get demand going. We're too soon to be, excuse me, in the region of the hot weather. I even read a report where the NOAA is saying that electricity usage this year in America should be down in the summer, as they're thinking that what's going to happen is it's going to be a bit milder than the previous year. Natural gas is used in a lot of the plants to fire up electricity for air conditioning, so we'll see what that all does. As you can see, as I'm through talking here just about now, where the markets are at. Over the weekend, give yourself and I this thought. You have a trade idea, you want to execute it, but you're going like me. Darn it. Is this a good one? Is this a bad one? And I'm looking around for my own things that I look for. I'm always looking, am I right? And believe me, I'm like Swiss cheese. As a trader, you're going to be wrong a lot of times. The key is to keep the risks narrow and defined. And if you can do that, you've got a chance at surviving then, because you're not taking that trade that had to work and now it's not working and you're busting your account. Sound familiar? I've seen it happen over and over. I cover 40 futures markets, charts, and then 5 ETFs each morning. I start recording 6:20 to 6:30 a.m. I've already read about the markets. I'll be able to talk about the technicals and the fundamentals. I will in that video is where I can say buy here, sell there. Here's where I think you take your money off the table. Why? And I put up more tools than you see in the videos that I do here. The reason I'm able to be more flexible, because you need a user ID and password, and the government then says I can say buy here, sell there. That's the key. It's got to be not a general public, but those that are, if you will, subscribers of some sort. I start this off and I make the price really inexpensive. The idea here is that I want to be the guy you go to for trade ideas. 26 cents a day for 30 days. You give it a try. If you like it, it can go to $15 after that every 30 days. It's not monthly. It runs on a 30-day period. Or you can buy a 1-year subscription for $13 a month. You pay it up front, and away you go on that, $156. Anyway you go, think about that. $156, gee, it's 3 cents in the grain market, right? That's what you're talking. Not very much for every day, Monday through Friday, me putting these out. And I'm going to start putting out special ones now, sometimes at night. That'll all be included with it. Again, how do you get this? It's simple. You go to our website. That's the ideal way to do it. Under Education or Research, it'll say Ira's Morning Subscription Video. Click on it. It tells you all about it. Just put in your PayPal, your credit card, whatever way you want to pay. Away you go. I'm Ira Epstein. See you come Monday. Have a great Passover, Easter time. Drive safely. Take care.